Good morning, good morning, good morning, secured entrepreneurs. Happy Money Monday. Please let Ms. Aurorah announce that for the month of May, we have 18 new secured entrepreneurs. How amazing is that? All right. I want to thank everyone who comes on board, everyone who participates with these videos, everyone who emails. Thank you, thank you, thank you. I am overwhelmingly grateful to have the opportunity to assist you in building your businesses, creating your legacies, everything. All right. In this video, Miss Aurorah wants to get into this full on, and I'm going to call it a campaign. Okay. That the Internal Revenue Service has launched this year, going after wealthy non-filers. Okay. Now, this is important to all of the secured entrepreneurs because everyone here knows that we believe in tax-free wealth. We follow the Robert Kiyosaki philosophy. We do all the things that the Internal Revenue Service tells us that we can do to legally avoid taxation. And we're talking every tax deferral strategy known to man, and all of the secured entrepreneurs know about this. Okay. So I want to let all of the entrepreneurs who are claiming to be maybe one-person businesses. You're saying you're a solopreneur. You have some LLC done, but it is a single-member LLC. All these things, okay? These things done the incorrect way, and you conducting your business legally the incorrect way, could put you in the number of individuals who the Internal Revenue Service is stating that they want to further investigate. All right. So I want to just let everyone know why it is you have to go from sole proprietor to CEO. Okay. Can we do it? All right. So for those of you who do not know who I am Miss Aurorah Dey, and I've helped hundreds of entrepreneurs just like you build 6- and 7-figure businesses tax-free. And we know that this is the secured entrepreneur movement. All right, now, secured entrepreneurs, here we are. This is IRS.gov. This is an extremely interesting article because Ms. Aurorah has told the secured entrepreneurs many times that she cannot make these things up. So there's some significant points in this letter that I'm going to point out to the secured entrepreneurs. Share this video with somebody you actually care about. Hello. IRS launches new effort aimed at high-income non-filers. 125,000 cases focused on high earners, including millionaires, who failed to file tax returns with financial activity topping 100 billion. Okay. All right. This was written on February the 29th of 2024. In the continuing effort to improve tax compliance and ensure fairness, the Internal Revenue Service announced a new effort today focused on high-income taxpayers who have failed. Let me take this back. We're talking high-income taxpayers. Now, secured entrepreneurs, we know that the individuals who pay tax are the individuals who earn income. So, red flag number one. Who have failed to file federal income tax returns in more than 125,000 instances since 2017. How many times has Ms. Aurorah told the secured entrepreneurs just how long it's going to take for the Internal Revenue Service to come see about you and what the circumstances will have to be? Let us go further. The new initiative made possible by Inflation Reduction Act funding. That's another pause, break, full stop. Inflation Reduction Act funding. Secured entrepreneurs, comment below. You already know what that's about. Hello. Begins with IRS compliance letters going out this week on more than 125,000 cases where tax returns haven't been filed since 2017. The mailings include more than 25,000 to those with more than 1 million in income. So if you claim to have earned more than 1 million in income, we might have to come see about you. Let's hear why. And over 100,000 to people with incomes between $400,000 How many times has Ms. Aurorah explained to the secured entrepreneurs that, number one, you're not going to be out here claiming that you paid yourself or that you earn any type of income, especially if you're talking about you're going to start paying yourself $400,000, okay? And 1 million between tax years 2017 and 2021. It's 2024. Okay. These are all cases where IRS has received. I wish I could have highlighted this, but I'm going to put the emphasis on this. These are all cases, put it in the comments, where IRS has received third-party information. What did I share with the secured entrepreneurs when that story came out, when Steve Harvey told his story on that podcast with those brothers, and he said clearly that his accountant had been robbing him for, I think he said 7 years, but somebody can put it in the comments what the correct years were. It doesn't even matter, but I'm going to go with 7. He said for 7 years, his accountant was telling him that he paid his tax. But the truth was, the accountant, who was a genius and understood the system of tax, decided that he was going to cut the check to himself. Steve Harvey did not know anything about this till the man died, and his secretary called Steve Harvey and told Steve Harvey what had gone on. So Steve Harvey, with his coon butt, okay, now I can say that because he's done some cooning. I love you, Steve, and all that stuff. I love the fact that you're married and you're being a family man and all that, but you done coon sometime now, okay? Because what did you go and do? He says, in his own words, he says that he hired somebody, and those people called the Internal Revenue Service and said, oh, Mr. Harvey hasn't paid y'all for 7 years. You need to see all this. And they were like, oh, really? Okay. Third party. Who's the other individual to which I actually love a lot? I am a big Fat Joe fan. So Fat Joe, please come to Vegas and do a concert because we want to hear Lean Back. Lean Back. Okay. Hello. What did Fat Joe say? That he was robbed by his accountant. This man went to prison because the judge told him that ultimately he was responsible for knowing what the heavenly accountant was doing. The accountant was caught up with a string of accountants who decided they were going to rob a whole lot of people. They were doing it together. Okay, this is Fat Joe's story. And he says he didn't know anything about it. He was none the wiser. When he found out, he hired somebody. They called the Internal Revenue Service. Hey, this man has not paid in years. Oh, really? Now that's third-party information. The Internal Revenue Service is also telling us the types of third-party information that they are claiming they're getting this from. They say, such as through forms W-2 and 1099s, indicating these people received income in these ranges but failed to file a tax return. So how many times has Ms. Aurorah talked to the secured entrepreneurs about these 1099s? Let's get it right, people, okay? Without adequate resources, the IRS non-filer program, it's an entire program, has only run sporadically since 2016 due to severe budget and staff limitations that didn't allow these cases to be worked. With new Inflation Reduction Act funding available, the IRS now has the capacity to do this core tax administration work. Like, we don't have a whole lot of other things to concern ourselves with in this country. We want to go after people who more than likely don't really owe you anything at all. Let's just tell the truth about that. Okay. At this time of year, when millions of hardworking people are doing the right thing, paying their taxes. Yeah, they go to a job. They're W-2 employees. They're forced to pay tax. Let's get that straight. Party people in the place to be. We cannot tolerate those with higher incomes failing to do a basic civic duty of filing a tax return. I want you to pay very close attention to what Ms. Aurorah just read for failing to do a basic civic duty. Didn't say anything about it being mandatory. What's the other word you would have to use if this is something that you could actually have a problem over? Somebody in the Secured Entrepreneurs, put it in the comments, because you know where Miss Aurorah is going, because they're telling you it's a civic duty. Didn't say it was a requirement. Let's go further. Said IRS Commissioner Danny Werfel. Hi, Danny. The IRS is taking this step to address this most basic form of non-compliance, which includes many who are engaged in tax evasion. All right, stop. Again, you cannot legally evade taxation. You can only legally avoid taxation. So if you owe federal tax, you need to pay it. Point blank, if you owe it, you need to pay it. If you have not taken the steps that the Internal Revenue Service says that you can take to avoid it, okay, for a period of time, then you need to pay. That's just the reality of this situation. This is one of the clearest examples of the need to have a properly funded IRS. Oh, they want us to properly fund a collection agency. That's what the Internal Revenue Service is, a collection agency. Okay. With the Inflation Reduction Act resources. Well, how about the Inflation Reduction Act give resources to supermarkets so that people can afford food again? Oh my gosh. The agency finally has the funding to identify non-filers, ensure they meet the core civic responsibility. Not mandatory requirement. I'm telling you, if people don't know how to read with comprehension, I don't know what to say. And ultimately help ensure fairness to everyone who plays by the rules. Oh my gosh. Grandmother, what big teeth you have. Grandmother, what big eyes you have. It's a wolf. Okay. This week, the IRS will begin mailing these compliance alerts for failure to file a tax return, formerly known as the CP59 notice. Did any of the secured entrepreneurs get a CP59 notice? I was waiting. About 20,000 to 40,000 letters will go out each week, beginning with the filers in the highest income categories. The IRS noted that some of these non-filers have multiple years included in the case count. So the number of taxpayers receiving letters will be smaller than the actual number of notices going out. People receiving these letters should take immediate action to avoid additional follow-up notices. We're going to follow up on these notices. Higher penalties, and we know what that's about. Don't do it to yourself, party people. Okay. As well as increasingly stronger enforcement measures. People in this category should also consult with a trusted tax professional. I'm so grateful that they put in here trusted, because what did I just share with the secured entrepreneurs? That people are being robbed by these untrustworthy accountants. And I will be extremely honest with the secured entrepreneurs. I have serviced former accountants who, gave their testimony and how they were really lured into being deceptive with clients. That's the word I'm going to use. We know they were robbing clients, but the reality is they were lured into being deceptive with clients is really the situation. They did it. Okay. And just understanding how it is they were allowed to do it. And I'm talking something as simple as giving these individuals access to your bank accounts, giving them access to write checks on either your personal behalf or your business's behalf. It's as simple as that. So people in this category should also consult with a trusted tax professional so they can quickly file their late tax returns and pay delinquent tax, interest, and penalties. So you can quickly pay your late tax returns, pay your delinquent tax, your interest, and your penalties, because they're coming for you. The failure to file penalty amounts to 5% of the amount owed every month, up to 25% of the tax bill. There is also special non-filer information on IRS.gov that can assist them. And everybody here knows that Mr. Aurorah will, go through this entire site, make phone calls. I want to know, okay? Since the IRS is not aware of the potential credits and deductions these people may have, the amount of potential revenue to be gained from this effort is uncertain. So I was very happy to read that. Why? Because if you didn't file, then here's the reality. Your tax bill may not be as high as you would probably assume that it is. Okay, so you want to make sure that you are doing all that you can to minimize the tax if you're in this situation, and they're going to give you the opportunity to make that happen. Okay. The third-party information on these taxpayers indicates financial activity of more than 100 billion. Even with a conservative estimate, the IRS believes hundreds of millions of dollars of unpaid taxes are involved in these cases. At the same time, some non-filers may actually be owed a refund. Yes, please throw that in there. You have to throw that in there to spice things up, to make people believe, okay, that there's a benefit to doing this. I love it. I love it. If someone hasn't filed a tax return for previous years, this is the time to review their situation and make it right, Werfield said. Come on, make it right, y'all. For those who owe, the risk will just grow over time, as will the potential for penalties and interest. Don't let it happen to you. These non-filers should review information on IRS.gov. That's right, because that's what Mr. Aurorah does. That can help, and consider talking to a trusted tax professional ASAP. The new non-filer initiative is part of a larger effort underway, with the IRS working to ensure large corporate, large partnership, and high-income individuals pay the taxes they owe. All right. Prior to the Inflation Reduction Act, more than a decade of budget cuts prevented the IRS from keeping pace with the increasingly complicated set of tools that the wealthiest taxpayers use to shelter or manipulate their income to avoid taxes. Keyword, avoid. Didn't say evade. Please, people, read with comprehension and get it together. The IRS is now taking swift and aggressive action to close this gap. All right. The IRS has a variety of efforts underway to improve tax compliance in overlooked areas where the agency did not have adequate resources prior to Inflation Reduction Act funding. For example, the IRS is continuing to pursue millionaires that have not paid hundreds of millions of dollars in tax debt. The IRS has collected nearly $500 million in ongoing efforts to recoup taxes owed by 1,600 millionaires, with work continuing in this area. In other areas, the IRS is pursuing multi-million-dollar partnerships, balance sheet discrepancies, ramping up audits of more than 75 of the largest partnerships using artificial intelligence, as well as other areas. So they're seeking artificial intelligence on these individuals. Okay, secured entrepreneurs, this is the reason why you have got to have your documents together. Okay, you've got to have your bookkeeping together properly. All right, you need to do that. And you need to have your legal entity structured properly. All right, you need to have your system in place so that you know where things are going, why they are going there, and what going there is helping you to accomplish. Okay, it's not a joke. The new non-filer effort focused on high-income taxpayers who haven't submitted a tax return is part of this larger effort to expand IRS compliance work to ensure fairness in the tax system. Oh, because it's not fair that people who go to jobs every day, all right, barely earning enough to live a complete lifestyle with happiness, have their taxes taken out before they see the wage for their labor. So, it's not fair that higher income earners just are doing what they want to do out here. They have to ensure fairness. Understand this. Now, this is important. High income non-filers. IRS actions escalate if tax returns aren't filed. People who don't respond to the non-filer letter will receive additional notices and other enforcement actions. Ultimately, this can lead to a variety of IRS compliance activity, including collection and audit action, as well as potential criminal prosecution. Please don't let it get there. Criminal prosecution. Don't let it go that far. As part of this, the IRS can also take steps to file what's known as a substitute for return. That's the SFR. I'm not going to get into that in this video because right now, Mr. Aurorah is going to take you to the slide where, for those of you who have not gone from sole proprietor to CEO, just hearing this, okay, understanding what's going on at this time, and you are an entrepreneur and you're out here being tricked into paying yourself, all right, it's time for you to go from sole proprietor to CEO. Let's get to the slide. So first, for those of you who do not know what goes on around here in the secured entrepreneur movement, as I stated earlier in the video, we follow the Robert Kiyosaki philosophy. So we know that Robert Kiyosaki talks about the employee and the type of tax that the employee is paying. He also talks about the self-employed and the type of self-employment tax that the self-employed individual is paying. And then he gets on over to the business owner. This is where the secured entrepreneurs come in. The business owner owns a system, all right, that brings us on down to the investor, where we are the CEO. We go from sole proprietor, which is the self-employed, to CEO, which is the investor, okay? But we know first that we have to create the system that will allow us to defer taxation. We are going to utilize the legal entities structured properly so that we can legally avoid the taxation the way the Internal Revenue Service tells us that we can do it, okay? We are going to employ every tax deferral strategy known to man. Everybody's wealth cycle is going to look a bit different depending on the type of business that they are conducting. All right. Now I'm going to give you a look at a small wealth cycle and how we do it here in the secured entrepreneur movement. All right. Here is a miniature wealth cycle. So here in the secured entrepreneur movement, we start with a properly structured anonymous limited liability company. And we don't get fooled by a lot of the marketing and propaganda and the regurgitation going on the internet, telling people where to file these organizations that are incorrect. We file these organizations in the correct state that gives us anonymity. Okay, the privacy enactments in the state give us anonymity. So 100% properly structured. Also, we are not member managed entities. We do not claim to be a member. We're not going anywhere telling anybody we're a member. Why? Because we are not paying ourselves. We are not going to file a tax return and state that we either lost or made money. Why? Because we have the option of being a manager managed entity. All right. And if you come on board with the Sole Proprietor CEO program, you will learn about how it is the Internal Revenue Service says that you can do all these things, how it is the state that you're registered in tell you how you can do all these things, okay? Mr. Aurorah cannot make these things up, right? So now that you have a properly structured entity through and through, all right, we're going to open up a bank account the correct way. The signature card is going to be signed the correct way. We know that we're going to have business credit on this entity. We need the capital. We need to come out here and conduct our business affairs, okay? So now we've got all of this cash and credit running on this wealth cycle, mainly because number one, the bank is going to be our first ally, right? The bank is saying, hey, look, we're monitoring you every 90 days. We see that you're helping us make money, so we're going to invite you to help us make some more money. We're going to offer you a line of credit. We're not talking about a credit card, we're talking about a line of credit, okay? So we've got so much cash and credit. Now we've gone out here and we've invested in some other income producing assets. We need a holding entity. We need another entity that we're going to hold this portfolio, that's going to hold the portfolio, going to hold the stocks, going to hold the bonds, the real estate, things of that nature. Okay. Now, these are income producing assets. This holding entity could be another anonymous limited liability company, or it could be an irrevocable trust. Okay. You can work it the way that you desire. It's going to be different for every person, every entrepreneur, depending on what their financial and business goals are, right? But again, you have to have another trust on this wealth cycle. A lot of people like to do religious trusts simply because, well, again, 100% tax exempt, right? 100% tax exempt. You can go and collect offerings, donations internationally, 100% tax exempt. That's an option. Or you just have another type of management trust that's irrevocable, because the irrevocable trust has all of the tax advantages. Okay. And then, of course, you're going to have to throw on some type of family trust on the wealth cycle, because you want all of the payouts of this trust to go to the beneficiaries of this trust. Okay. Once again, this is just a miniature wealth cycle, just for you to get an idea of how it is you would begin to operate properly in commerce, so that you don't fall into the path of the Internal Revenue Service's campaign to go after non-tax filers, because this entire wealth cycle is 100% tax free. Would you like to know how to do this? Would you like to know how to put this in action? Links are going to be in the description. Hello. All right, there you have it. So for those of you who know that you need a properly structured system, you can go in the description box, click the link for the Sole Proprietor to CEO program. And what do we say back in the day? Get on board of the Great Space Coaster. We'll explore. Okay. You all know you can find me, Miss Aurorah Dey, at AurorahDayConsulting.com. And until next time, ta-ta.